Hi, it is Sunday, September 16th. Taking a look at FedX. FedEx reports after the bell Monday, the 17th, tomorrow. And um, I, I totally didn't realize this. It totally slipped past me that this stock was reporting tomorrow. But this really intrigues me because we all know that FedEx really moves the S&P 500 because it touches down into so many different sectors in the economy. And so the S&P 500 can really hang on the balance of what goes on with FedEx. And in pulling up the chart to update it and post it for you guys, I also noticed that, remembered that it reported very badly. It had some bad comments and so forth after the last earnings report, and it really just completely fell off the cliff. It broke, in fact, its 2018 low that it had made back in February and made a lower low. So that's quite a statement, isn't it? It made a lower low than the S&P 500 even did back in February at its low, making a new 2018 low at 2244. But as you can see, the halfway back point for the whole range from that new low back to the all-time high that it made in January, and by the way, it made its all-time high about a week ahead of the S&P 500. Anyway, the halfway back of that whole range is 248.55, and you can see the price really broke out from above there about 4 sessions back. 5. It looks 1, 2, 3, 4, 5 closes above this halfway back point. And something else that went on going into the last earnings report was that we had a 50-day simple moving average crossing up through the 100-day. And when you get out into those simple moving averages, we call those golden crosses because they're much longer term prices and they really show a bullish or bearish move in a stock when those begin to cross each other, rise and fall. And as you can see, it had just crossed up through a still falling 100-day. And by the way, that cross ends up being right at what winds up being the halfway back for the year. That's kind of intriguing as well. But in any case, it squandered that. It reported badly. It rolled over. It fell down through its 50-day and its 100-day. Boom, making this new 2018 low. And as you can see, that 50-day wound up death crossing back down through the 100-day and even death crossing down through the 200-day simple moving average. So this strong rally that it has made since putting in this new low here for 2018 was really necessary in order to undo this damage. And if funds want to keep this in their portfolio, they can't be long a stock that's doing things like this. It's just sort of like one of their mandates. You know, it just shows that the stock is not in good shape. Its business has problems underneath the surface, possibly, and that's why these things are happening. So there's a lot more to the direction and the crossing and the rising and falling of these moving average prices than meets the eye. Anyway, so here we are now. You know, it had another little back test here to a low on going into Labor Day weekend, and then here it's been on a tear ever since we got back from the holiday, and that has like curved and fended off the 50-day simple moving average from falling any further. And here comes the 50-day barreling towards a now rising 100-day, and now rising 200-day. The 10-day simple moving average here you know, threatened to cross down through all the SMAs, but turned itself around and moved back up through the other SMAs as well. So that's all part of what fueled this last leg of the rally. So what lies ahead for FedEx? Well, it reports tomorrow, Monday, after the bell, and that really intrigued me because that fits into this cycle, this 6-day cycle that I've been wondering about on the S&P 500. I've tweeted about it a few times, how we sold off for 6 days in a row. We closed under the 10-day simple moving average for 6 days in a row on the S&P 500 now, is what I'm talking about. And that our rally as of Friday is 5 days up now in a row. So we only have one more day left to sort of match up the whole pattern. What's it going to be? Are we going to have a rally tomorrow on the S&P 500 ahead of FedEx, and then see FedEx report badly and roll the whole S&P 500 over? Are we maybe going to have a sort of inside sideways, sort of slightly lower day on the S&P 500 tomorrow to sort of hit the reset switch and break and foil that pattern and make Friday's Friday's close and Friday's high, the last move up at 5 days, and then sort of set the reset switch and give us a whole brand new set of up days that we can look forward to in the S&P 500. Provided that FedEx reports well, that's sort of the idea. So I'm sort of pitching to you here that FedEx could be pretty much the straw that breaks the camel's back, or it could be the fuel that lights the fire. We'll see Monday after the close, but just keep that in mind as you go through the day tomorrow, especially if you take home options in the S&P 500 tomorrow after the close. Okay, anyway, so let's look a little further here at FedEx. If it reports well, what it needs to do is break up through this downtrend. It's coming in about 261 right now. That rhymes a lot with the 80 handle rule, because we know we need to pass 260 to 265 in order to get to 280, and we have to pass 280 all the way up here in order to get to 300, which is about where our measured move target is. This is a measured move target that I put on the stock back when we first looked at this chart back in June at the last earnings report. And I had proposed that if it could make it up through this 274.66, which is the all-time high for the stock, that we could do a double up on the move. I can't even remember why I chose this particular move. I'm sure it has something valid to do. It probably has something to do with this right here, maybe this high to something else. I don't know, whatever. I'm sure there was a very good reason for it, but it all fit together, and it rhymed very well with making it to 300 on the stock, so it worked well. These measured moves are not, my concrete call that I'm saying that they are definitely going to go there. They just give you targets to shoot at out into the sky as we head up into new all-time highs. You really need some sort of rhyme or reason as to why or how we can get to a measured move. And measured moves work because they start from a point where people are willing to get re-involved in a stock, and they don't mind missing out on the trip to get there. But once they get to that breakout point, they want to make as much money as the people that brought the stock there for them made. And these people I'm talking about are funds, pension funds, big funds that are more conservative and so forth. And a lot of them might be like, you know what, we love FedEx, it's a great company, but until it takes out its January high, we're not putting any new money to work in the stock. So once it gets to that, taking out that January high, it can potentially double up its move from where it came from. And that measured move I was putting on here like this, and it would get it to 297, rhymes a lot with 300, so on and so forth. So here are your targets that it needs to make to the upside. If it comes back, if it fails at this downtrend, if it reports badly and it rolls over again, you have your 2018 halfway back. Your 2018 halfway back obviously is the gateway back into these simple moving averages. Can't get much easier than this. If it cannot hold $248, it's going to go down through these simple moving averages, the lowest one being 242 at the 50-day, and if it can't hold its 50-day, it's going to backtest the 2018 low. If we need a measured move further lower from there, we'll cross that bridge when we get to it, but I think that that's plenty of meat on the bone to short this name if it disappoints, does not report well on Monday night, and it winds up dragging the whole market down with it, which it potentially could. So anyway, I hope this video made sense. If you have any questions about what I've said here, just shoot me a direct message, and I'll be happy to answer your questions. Thanks for listening. Have a great rest of your Sunday. Good luck and good trading.